Good morning, everybody. This is Dr. William Jones coming to you from the offices of the Future Millionaire Investor Alliance. Today, we will be discussing to use or not to use indicators, and we're going to have open dialogue in case some of the members want to ask questions as well and go over a trade that was taken using the indicators. Let's start out like this. A lot of people use indicators, and there's nothing wrong with indicators if you know why they're to be used. And indicators are nothing more than a confirmation tool or a visual confirmation tool once you already see it in price. It is very dangerous and not suggested that you ever use indicators as a means of trading, meaning that when this turns green, I'm going long. When this turns red, I'm going short, and things of that nature. What you don't want to do is use an indicator simply to trade. What you want to do is use it for confirmation. And let's take a look at the trade that we took this morning using the 25-minute and a 5-minute chart. What we did was here, we saw what price the bears tried to take over by closing lower. And we also see where price tried to come back up and retest the highs and then pursue to go down before taking off here. Now, before it took off to the upside, it came and hit our top resistance band here, and I entered the trade at 466,131,046. I was going for a 10-pip target and ended up getting out at 946. Okay, so it was the 10 points that I made on the trade before this thing really skedaddled to the upside. But you used the indicator for what I used the indicator for what I already saw in the price. I already saw that the bears were taking over, were trying to take over, and I saw where it hit my resistance band. I had already had the confirmation that it was going down, so I knew that I could get some level of profit out of this trade, which I did, and it worked out fine. That is why you want to use an indicator. I can show you a lot of other examples. Here we can see where the bulls took over. Okay, let me point to this particular session here. You can see here where the bulls took over on this bar for sure. And then once it took over, then it came back down to touch my support band at the bottom. You could enter the trade, took the trade for a ride to the upside, would have made money. But I'm not just arbitrarily getting in when it touches the band, because if you just arbitrarily get in, touches the band, I'm going to go long here. You have to have a reason for the trade to be taken using the indicator. If there's no reason based on price, then it is very foolhardy to get in and think that you want to make money on a consistent basis. The best thing to do is to learn how to read price flow, learn where price flow is going, and therefore you are able to make informed decisions. It's almost like driving a car. You may know how to drive a car using the brake and the gas pedal and the steering wheel, but the turn signals, seat belts, airbags are assistance to give you warning if something is wrong, to warn for drivers taking, moving in and out of lanes and things of that nature. So really be careful and be aware of why the indicator is supposed to be used. Indicators, again, I'll say this 1,000 times. The indicator is only to be used as confirmation for what you've already previously seen in price. That is the bottom line. Anything other than that, like I said, is foolhardy and a definite way to inconsistency. I'm going to go ahead and end the session because I've shown you 2 trades that worked, and I've shown you a particular example that didn't work simply because I was simply using the indicators. I'll open it up for questions and open dialogue. If there are no questions, I'll go ahead and end the session. Are there any questions from anyone?